In this video, I'm going to be breaking down a beautiful setup using ICT and SMC concepts to dictate where we think the market is going to go next, using the higher time frame, premium and discount arrays, and all that good stuff. I do think this video is going to provide a lot of value for you. If you do learn something, make sure to drop a like and subscribe. It helps the video, helps my channel, and we're almost at 40,000 subscribers. So you guys wanted a breakdown video, here we go. I'll see you on the chart. All right, beauties, thanks for meeting me back on the charts. You won't want to miss this breakdown. Make sure you stay till the very end of the video. You're gonna be grateful, and I hope you learned something. So let's just take a look at the charts right now. You can see that we are on the 4-hour time frame, but more importantly, we are now on the daily time frame. You can see that the market has come up very, very corrective up into this area, right? We respected this area, this high probable order block that swept liquidity to the left, causing a move to the downside. Now, if we jump down to the 4-hour time frame, you can see that price came up very, very corrective, like I just said, taking out all this liquidity here. Now we went and took out all these old highs, mitigating this imbalance from about the 21st of September, and then we had a strong reaction out of there, right? So this is good because we're bearish on Euro USD overall, bullish on DXY. So we want to see a strong reaction out of our sell areas. Like I've talked about in previous videos, price behavior. We want to see how corrective price action is being or heading into our area to sell or buy, right? We don't want to be selling if the market's coming up very heavy, and we don't want to be buying if the market's coming down very heavy, right? So let's just take a look here. You can see obviously mitigated this area, then we had a strong move to the downside. This ended up breaking below this structure point right here. So this is going to be our break of structure right here. Our break of internal structure, I'm just going to mark this out as BOS, and you can see swept liquidity caused the move to the downside. We also ended up sweeping this internal low here. So we swept liquidity. So now, not only have we had a break of structure to the downside, we're overall trending bearish. So we've had a realignment, right, on the internal structure. We take in external liquidity from this low. So once we take external liquidity, or any liquidity for the matter, on the 4-hour, the daily, the hourly, whatever it is, we can anticipate a move in the opposing direction, right? Especially when price has now created this new bearish price leg from this candle high all the way down to this candle low. Now, within this price leg, we want to be selling in a premium, which means we want to be looking for longs at a discount. It's very simple. So this is our area. This is our premium discount area. We can see there's many areas up here that the market can come into, right? We have this imbalance up here. If I mark this out like so, and then we have this imbalance over here. 2 areas in a premium. Notice this area right here. This is where we want to be selling, and this area down here is where we want to be taking longs. We don't want to be longing up here, and we don't want to be selling down here. It keeps it very simple. So if you didn't know that, hope you learned something right there. And if you did, drop a like on this video. I appreciate it so much, and we are on the way to 40,000 subscribers, which is nuts. So let's take a look to the lower time frames here on the hourly specifically. This is very clean because the market has to come back up into this premium level to continue selling, right? Just like the market had to come up all the way up to here into a premium of this range to sell down, right? And you can see each time the market comes up into a premium, we have the sell reactions, and every time we are in a discount, we have the buy reactions, right? So right here, the area that I'm paying attention to is starting over here. So we swept the liquidity to the left, which is a good thing. We then had a break of structure to the upside, breaking above this high. Not only that, but we left behind an imbalance. So those are very key requirements that we need to see when we want to see the market shift in the opposing direction. So now I'm paying attention to this price leg from here to here. You can see we went like this, created a higher low, and then we went and created a higher high right here. We're also in, ready, a discount of this price leg that I talked about from this candle high down to this candle low, right? We are also coming down very corrective compared to how we came up. Another good thing, another requirement that we want to see, right? So if I pull the fib out here, this is going to give us a beautiful OTE entry right off of the hourly time frame. You didn't even have to go lower here, but of course we like to break the markets down. We like to look for confirmation entries, or I'm going to show you a risk entry that you could have had very nicely that one of our members in the community caught. It was absolutely beautiful, and this happened in London session, so I wasn't able to partake in this trade. It was all sent out in the Discord beforehand. I send it out every single New York session, what we're looking at on the higher time frame, and then where we're looking to enter. So if you're interested in that, click below. If not, we'll just continue on with the video. It is no big deal. Let's jump down to the 15-minute time frame now. So you can see this area of demand was responsible for this break of structure to the upside. So if I just bring this over like this is our new area that we want to be looking for longs from. Anywhere within this area right here. Now, the reason I moved it up a little bit is just due to the fact that we did have this imbalance right here, and the market could easily come into there. It's also in the 79 or 71. I don't have it turned on here. usually have it on, but I completely forget. So the 71 retracement right here, this is the OTE right here. We have Asia low over here, which I'm going to mark out like so. Okay, so we have Asia low liquidity. We're stacking buy side liquidity, and you can see that it is now London session. London session took the top of the range. Now it's heading for the bottom of the range right here. So this is a trade that you could have easily just placed a limit entry on. If you did want to just trade the OTE tool, it could have been anywhere within here. OTE is obviously the Fibonacci. I say OTE because it's ICT concepts, but the Fibonacci itself with these retracement tools have been used since the dawn of time. But for the sake of the video, we're just obviously going to call it the OTE tool. And a clear drawn liquidity would be up here in premium prices, right? So if we just wanted to do that, you didn't even have to jump lower than the 15-minute time frame or the 1 hour time frame. If I go set my pending here using FX Replay, you place order, beautiful, beautiful stuff, just like so, and we will take a look and see if we get tagged in. Another thing that I want to show you is what happens if we want confirmation entry. So let's just let the market come in, and you can see that we are now tagged into this trade. It ended up mitigating this order block very, very nicely. So this is an instance where you could have just had your entry on this demand zone if you wanted to. Now, the reason I like to use the fair value gaps, the imbalances, is because the market isn't going to come down lower all the time or higher to that extreme. Sometimes it's going to fill the imbalance before our point of interest and rip the other direction. So this is the area of interest right now that we can see we have been tagged into. You can see that we are now in the trade. Let's see how deep it goes. So we're starting to have that bullish reaction right now, which is very, very nice. I'm just going to take this off now, and let's see if there are any lower time frame confirmation entries that could be had right now. Okay, let's see if there's anything that we could see. You can see on the M1 time frame actually. Let's take a look. On the M1 time frame, we actually did have a break of structure. I'm just going to zoom in on this price action right now. Okay, so let's just study the price action we are seeing right now. You don't have to use the lower time frame whatsoever, but for the sake of this entry model, there was another entry here, and this is the entry that a lot of people ended up catching. So let's just take a look. We had the move down, right? Then we had the move up, move down again, internal liquidity over here. And if we pay attention to this high right here, this high was actually responsible for this move down. So we had a move down taking out this low. Then we broke above the high that caused the move down. So that is going to be an internal break of structure. That's going to be a lower time frame break of structure, right? The higher time frame, we are in a discount. The 1 hour time frame, we are in a discount. We are in an optimal trade entry. So we are in an OTE for the Fibonacci that I just showed you guys a second ago. Now we can trust the lower time frame in this instance. If we look on the 2 minute time frame, it isn't as clear, but the M1 definitely was. Now, what I would do in this instance, if I were to enter this trade anywhere within here on this order block, I wouldn't have my stop loss right against this low. So this is where a lot of people go wrong with the M1. They like to have the super skin tight stop loss. That is not going to help. Get your stop loss a little bit bigger, maybe 5 pips or something, just to give it a little bit room when you are using the M1 time frame. I know there's going to be some people who maybe don't agree with that. From my own experience with the M1, you got to give it a little bit of room, especially in these market conditions right now, because you are going to get swerved, right? You're going to get swerved, and not only that, you're going to get stopped out and swept. So making sure that you are utilizing, a little bit of room just to cover spread, just to cover any sweeps, that will help you a lot with the lower time frame. But you literally didn't even have to go lower. And all we're doing right now is following structure. All we're doing is looking to buy in a discount of the higher time frame leg, and then utilizing the hourly time frame, the 15-minute time frame, and trading in the direction of that, right? This is our 15-minute leg. This is our 15-minute price action that we are seeing, and this is the hourly price action that we are seeing. Remember, we swept liquidity over here. We went and broke, so we broke above this. We then retraced into a discount. What did we do? Move up higher once more. Then we came down corrective, and where did we just buy from? A discount of this new price leg. Now, if that is the case, we are anticipating the market to come up into premium levels, and that is exactly what ends up happening. This was beautiful and a trade that I wish I was able to participate in, but unfortunately this happened in London session. And New York session didn't give any entries in a discount of this price leg. You can see we came down, filled this imbalance just a little bit, and then New York session just continues to unfortunately push us up. Not unfortunately, but unfortunately, if you were looking for longs like myself, what I wanted to see was a retracement down like this into this discounted leg from here to here. and then I would have looked for longs. But sometimes London session just takes off without us, and then New York session will follow that momentum. And that's honestly the daily cycle with London and New York. I will have a video on this later on at another date. I do talk about this in my mentorship if that is something you are very, very interested in. Remember to click the link in the description. If you do like FX Replay and you like the backtesting software, I highly suggest checking it out. I'll have a 15% off discount in the link in the description. Beautiful backtesting software. I know I talk about it, but it's just unbelievable, and I use it all the time, and I think you should too. It's wonderful how easy it is to just get so much data to trade and not, get the mental reps in and the live emotions and all that stuff without being in live. It's something that I wish I had when I was starting out, and the fact that we have it now is just unbelievable. So make sure to click the link in the description of the video. Make sure to use the code to get 15% off. And guess what? If you don't like it, there's a free trial for 5 days. You can try it out. If you don't like it, you can just cancel. It's entirely up to you. So I'm gonna quit rambling on. I know you guys have requested a trade breakdown video, and I didn't trade, so this is a beautiful one to break down. Unfortunately, I wasn't able to get in this trade. Like I said, happened in London session, but it is what it is. Perfect learning experience for you guys. So I'm gonna quit rambling. Like I said, what do I say at the end of every single video? Let's be 1% better every single day. Appreciate you all, and I'll see you in the next one.